Audrey Greenberg, host of today's show on Money Matters. Welcome. Today, my co host is Mike Dever, founder of Brandywine Asset Management. And our guest today is the remarkable Tiffany Wilson, president and CEO of the University City Science Center. Hey, Mike.
Hi, Audrey. How's it going?
It's going well. Wow, the market these days. What is going on? Talks of recession. We're having one of the worst time periods in the history with stocks. Other speculative assets are like crypto, for example, have collapsed. Where do we go from here? What do we do?
Yeah, it has been a bit of a panic. It's one of the first 9-month periods, starting off a year. I mean, we're almost through the year now, in decades. The financial crisis, and I mean, it's really kind of in line with what was happening in the financial crisis. Now, in that situation, it continued to fall. If we wanted to go down as far as we were at the depths of the financial crisis, we'd actually have to drop about another 35% from here to get to that. So if it's like that, it's really troublesome. But so our view is generally that we've shifted from a decade or more of tailwind to a headwind, and certainly the Fed is part of that, is a big part of that, raising rates, and instead of providing liquidity to the markets, and they were providing trillions of dollars of liquidity to the markets, along with additional trillions from the government. That's now turning to where the Fed is pulling money out. So I think we'll get some bear market bounces, but I don't see a sign yet that we're at the ultimate bottom for stocks. One example is you've had compression of the price earnings ratio, and it got down to 15 or so in this last little sell off. Well, that's not really a bear market bottom. That's sort of an average long term number. And if you look at
Mhm.
the cyclically adjusted price earnings ratio, it's still in the mid to upper 20s. It's like 28. So and that should be down again in the 17 maybe range. So that we've got, I think, potential risks.
hmm So where do you put your money? What do you do if people are looking to invest? I think people are sitting on a lot of cash right now. Certainly, there's a flight to quality. We had seen a lot of European investors with the inflation that's happening in the UK putting their money perhaps in other geographies and in other asset classes. So what are you seeing as a sort of attractive place to park your cash right
Right. So some of that, I'd still be a little bit hesitant. We've had a big bond yield, increase over the last year, this year really, but I don't know that that is over yet. So I do think there's still risks there. That's one of the issues you've had, and I'll try to talk about where to put it in a second. But we're not to put it this year has been not just in stocks, but in bonds as well, or any other speculative assets like we talked about last November, cryptocurrencies. Um, and that's because we still have these headwinds we're facing. And we wrote an article, a white paper last year, the future returns of a 60/40 portfolio, and we saw this decade as being really, really poor returns for that portfolio, which is 60% stocks, 40% bonds. Now, some of that
now?
poor
Which
return has
decade? Do
got
you mean the 2020s or what?
in the 20 yes, in the
Yeah, okay.
2020s.
Yeah.
So there's it's improved some just because both stocks and bonds have sold off. So bonds have become more attractive. But when bond rates were at 0.5% or 1%, there was really almost nowhere they were going to go, except rates higher, bond prices lower. Uh, I do think today you could probably put some money in the shorter term maturities, where you're not getting hit when if like the long term rates go from 3.5 and the longer term government bond to 5, the bond price itself will come down quite a bit. If the short rate goes from 4, so where it is now, 4.20 to 5 or 6.20, 7.20 even, it's not going to hurt it as much just because the duration is shorter. So I would say that's one place to put it. Um, talk in our book, we have protected funds. There's a number of funds that are out there now that are ETFs and mutual funds that people can look at that provide some sort of downside protection to the market. You may not catch the whole upside in most of those, but if the market falls 20%, maybe you give up 5 or 10. You don't give up the full 20. It depends. They're all structured differently, so it's a little complex. But it's a tough environment to find safety, and it's cash is tough because you've got inflation 7-8%, and so that means you're essentially losing automatically that amount every year if you put it in cash.
It looks like some of the labor statistics are softening up, so to speak. Unemployment starting to go up, maybe tick up a bit. Do you think that will help with inflation, or what do you think are the implications of sort of loosening employment statistics?
So normally that I would say yes, and I think there will be some impact on inflation from softening of the employment situation, and we did see that, as you point out, more recently. We're starting to see a little better ratio of jobs per people looking for work. So it's not quite as tight a market as it had been, but there's also you've got just production cost pressures, and the war in Ukraine's still contributing to that. Europe's going to have just a heck of a time, getting through the winter without the natural gas supplies that they're dependent on. So I think you'll see some inflation there. Just today, before our show, OPEC decided to do a production cut, and to provide support to the oil markets. They want to see higher oil prices. That just trickles right through the entire economy. So there may be some softening in the pressures from wage increases, which, by the way, have not kept up with inflation. So people, even though they got wage increases, they still lost money over the last year relative to what the stuff is they're buying or the rents they're paying has increased. So that'll help a little bit, but it's not in itself going to be enough.
Yeah. We've seen some, particularly at Center for Breakthrough Medicines, we're bringing on all this space online. We're seeing a lot of problems with supply chain. I think that's getting a little bit better with semiconductor chips and some of the electronic components, but it is tough to import right now from overseas. I don't know how much that would be impacting the market or not.
Yeah, it is, but you're seeing freight rates coming down quite a bit as well, meaning at least they can get the products here once they have the product produced. Where for a while there, just the freight costs, to get it across the ocean was astronomical. So there is definitely softening. We're seeing softening, but there's a lot of things that could still contribute to supporting prices and price inflation, like the energy complex, some of the housing issues, even though housing itself is starting to tank, and it almost has to. It just got so far out of line.
Yeah.
You still have so few people now that are able to afford a house that they're
Yeah.
renting. So
Right.
rental rates are still inflated, and I don't see them easing anytime soon.
Yeah, that's a good point. We did get an audience question, by the way.
Sure.
Henry Lang from Philadelphia asked, how do you short a stock?
Okay, it's actually pretty simple. If you've got a brokerage account, you set up a margin account with the broker. That allows the broker to hold your stock in their name, and with that, they just use that to or the cash in your account to borrow stock from someone else that had a house account like you, borrow that stock, and then resell it in the marketplace. So you don't actually own it, but you've sold it. So now you're short that stock. And it's a little bit risky. We've had over the last 2 years with the meme stock craze, stocks that should have gone to zero or close, like GameStop, that actually just ran up in price 100 times because everybody just started buying it, and all the shorts had a cover, and they actually bankrupted a hedge fund in doing that. So it's a little bit risky, but it's easy to do.
Got it. Well, if anyone else wants to send their questions into Money Matters TV, here's how you do it. Thanks, Mike.
You can have your questions answered on Money Matters. Please go to our website, money-matterstv.com. On our homepage, click on the banner on the right that says, Send us your questions. While you're on our website, you can find information about our host and guests, as well as show notes and links about this show and past shows. Money Matters is also available as a podcast on iTunes and Stitcher, so you can listen to Money Matters while you're on the go. That website address again is money, MONEY, dash matters, MATTERS, TV.com.
Mike, we have a really special guest today, a fellow colleague of mine, Tiffany Wilson, who's CEO of the University City Science Center and also a fellow transplant here to Philadelphia. Welcome, Tiffany.
Thank you, Audrey. It's
Hello,
great to
Tiffany.
be here.
Yeah,
Thanks,
it's so
Mike.
good to have you. Yeah, so I guess we'll kick off the questions. Tell us a little bit. I obviously know about the Science Center, but I think there's a lot of people out there that don't know about the Science Center, what you're doing, what your role is, and what are some of the initiatives that you have over there?
Yeah, no, it's a great point because the Science Center has been around for almost 60 years. And so we've evolved quite a bit, really starting from a real estate development standpoint to create a marketplace, a commercial corridor along Market Street in West Philadelphia, really to support the innovation coming out of the healthcare systems and academic research institutes. And over the past 10 years or so, we've been evolving in more of a programmatic way. So really thinking about how do we create programs and spaces to support the innovators who reside on our campus. And so really the focus has been, since I came on board, on really looking across the ecosystem, seeing where gaps are and where we can refine our programs related to the commercialization support for new innovations, cultivating the next generation of STEM talent and providing workforce development opportunities, convening the community, which has been interesting coming out of COVID. And so, is it virtual? Is it hybrid? How do we get people back in person? Because that is, I think, the beauty of the creative space and bringing human beings together to really develop those relationships. And then we have a new initiative around capital to really raise a venture fund for early investment in med tech, digital health companies, diagnostics.
Let me just jump to that last one real quickly then. The financial side with the raising the fund. What size fund are you looking to raise? How are you going about doing that? Who's the target market for that? And what can they expect getting out of that?
Yeah, so it's a $25 million health fund. And so we'll be in co-investment fund. We'll be investing in late seed, early A companies, predominantly in the Philadelphia region and the tri-state region, where the Science Center has had a historic footprint. I think what's interesting about this stage, and it's a small fund, and we hope to grow from that, but it addresses a gap that we've noticed that exists not only in the Philadelphia region. I experienced it in Atlanta as well. There's a lot of these innovations in medical technology and digital health, but the companies still have to go outside the region to raise that early capital. And so really starting to, figure out ways to bridge the gap between non-dilutive funding and later stage growth capital and private equity. But at the same time, having the programmatic support to an ecosystem and network and know-how at the Science Center to work with that stage of companies to help them identify the right milestones to de-risk around, to make those connections. A lot of times companies of those size, they don't know what they don't know. And so really focused around, supporting the programming tied to capital efficiency to hopefully even out some of the gaps in the capital continuum. Just having the last 10 years, seeing the pattern recognition of, thousands of startups from all over the world, they make the same mistakes. That it's not rocket science type things, but if you don't know and you don't have access to the right expertise at the right time, you can blow through a lot of capital really quickly.
Yeah, it's amazing. Some of these literal rocket scientists are the ones that can't do the fundraise. But what I would say is, and I've heard you say this before, I love this line, we need a continuum of capital and resources local to Philadelphia so we can support these companies from idea all the way to commercial launch. It's such a good point.
Yeah, I mean, there. If you think, and I don't remember what the latest number is, but the NIH funding, federal funding flowing into the academic research institutions and healthcare systems in Philadelphia, and this whole saying, if it's the meds and eds here, that is one of the things that really attracted me to this role and to the Philadelphia region, of the density of healthcare systems and patients under care here, in a just very tight geographic region. We have such a tremendous opportunity to validate real unmet needs in the community and the patient population, and all the assets. I mean, Audrey, you and I had this conversation the other day. All the assets and infrastructure and expertise is here, in a very dense area. If we can get people to connect the dots and collaborate more and lean into kind of stepping outside your comfort zone. Maybe it's not the way we've always done things, but there is tremendous opportunity here, I think, to have an impact and then scale nationally.
Yeah.
How
Go ahead,
how
Mike.
do you do? Yeah, sorry. How do you do that? How do you get the state and the city, Philadelphia, more actively involved in the operation?
That's a great question. I think, we've got a lot of opportunity ahead of us. We've got some administration changes. We're coming out of COVID. There are things that maybe would not have been possible prior to COVID around, telemedicine being a thing, the continued growth of cell and gene therapy in the region, and kind of understanding the adoption hurdles there. Um, you know, I look at Massachusetts, and people, ask questions a lot around like, oh, if only we could do what Boston has done and things like that. Well, they were Massachusetts was very intentional in doing that. It didn't happen organically overnight, right? There's significant investment by the Commonwealth, and to really drive and promote collaboration in new ways, and to get industry involved. And so I think we've got an opportunity, and we need to do something big and bold, and focused, because all of the innovation is here. The opportunities for talent development and workforce development and real estate development, it's all here. But we do need the state and local support to really create those business friendly environments, to thrive.
Yeah.
Can they
So
participate in the funds at all
Mhm.
that you're raising?
I mean, potentially, sure. For those kind of state vehicles, the state has really, they invest into the Ben Franklin Technology Partners. That's kind of their avenue for making those venture, and Ben Franklin just got a huge investment from the state on that, and they play a great role and have historically in doing that. So we work closely with Ben Franklin, and there's an opportunity for us to co-invest there, but we're not limited to just within the state. And so we can invest outside the state and invite companies into our ecosystem to do clinical trials, to relocate here, to set up shop here. But then we've also got the ability to invest broadly in startups, across Pennsylvania, New Jersey, Delaware.
Mhm. And you can identify or potentially use some of these funds for training the next generation of talent. A lot of these therapies that we're potentially investing in are novel, maybe don't have the required skill set that is local to the area. So I know obviously the Science Center, you have a lot of educational platforms.
We do. And so the programs at the Science Center are supported by federal and state grants, sponsorship, and philanthropy. And we continue to work to diversify those revenue streams, so it's not as, the programs aren't as grant dependent, because that can add quite a bit of stress in the different grant cycles. We do have, 2 programs that we're scaling right now. One is our firsthand program, really aimed at middle school and high school students, predominantly in West Philadelphia. They come to the Science Center during the school day, to a dedicated lab for hands-on STEM training. They're mentored by scientists in the building. I think there's an opportunity to replicate. We've got a large Department of Education grant study that, to see how we can scale it across Pennsylvania and regionally and even nationally. And there's interest in different cities in kind of taking that playbook, if you will. There's another program we have, basic building and understanding of lab basics, the BULB program. And so that's really aimed at adults with a high school education, maybe some college, to provide them the understanding with the basic lab technician skills where they can go into some of these labs across the region and really scale. But I see there an opportunity as well through partnering with the community college, with other universities to expose students to careers in life sciences that may not even be a scientific level job. And so, Audrey, you and I had the conversation recently about the importance of quality and compliance and quality assurance. And, these are also tremendous career opportunities for talent in the region that'll be much needed as the industry continues to grow.
The personnel problem, we kind of talked about that a little bit before you came on the show, as far as the employment environment, and it looks like it's maybe softening a little bit. So there's maybe some more ability in attracting the people you need. But does this environment that we're in right now, where you've got the economy starting to soften, and just you've got over 90% now of corporate CEOs saying that we will be in a recession. So there's a lot of negativity out there. And how does that affect both the underlying business as well as the fundraising that you're doing in the venture?
So great question. Yeah. Perfect timing to be raising an early stage new fund, right? So I'm going to look on the bright side here. I think from we have seen through the pandemic and no slowdown in life sciences companies who need lab space. They continue to grow. There's not enough space in the region. I don't see that going away. As long as these therapies are out there, these are long game type industries. It's going to take time for adoption to occur. It's going to take time for the healthcare economics of these new therapies to flush out. It may slow, but I don't think it's going away. We have not lost any tenants. Activity had seen a downtick in activity even in the heart of COVID. You can't have a lab in your kitchen, at least as it relates to cell and gene therapy.
Yeah, even in my kitchen.
And so, as it relates to the fund, look, I mean, I see, and it'll be difficult, but I also see it as an opportunity where through COVID and some of the new therapies that are, telemedicine platforms and digital health platforms that prior to COVID, payers wouldn't touch, the providers weren't interested in. There is an interest in that now. And like it or not, our focus is really, I'm curious around where technology can impact outcomes and improve health equity issues. And you can't hide from that now. So it's front and center, and the opportunity is now to think about how do we move some of these early stage startups or advanced research projects, from the grant funded pilot to bringing different folks together to create that commercialization continuum and scaling plan to kind of align with the capital side. So I don't think innovation in healthcare technology is going anywhere, and the gap is real. And so, I think if we can align that in a way to lower the risk profile at an early stage, and I believe we can, I think we've got a way to mitigate that risk.
Yeah. So is that what attracted you to Philadelphia? I mean, I think you started the Science Center 2 years ago, maybe moved here a year ago from Atlanta, having lived in many other cities. What brought you here, and what do you think is the unique opportunity for Philadelphia? Is it providing this gap from idea to preclinical or commercial production, or what is it?
So the joke is, people ask me how I got to where I am now and how did I end up in Philadelphia in the Science Center. And I laugh, if you had asked me 20 years ago, would I be leading a nonprofit in Philadelphia working this closely with universities and healthcare systems? I'm like, why would I ever want to do that? Not that it's a bad thing. It's just so different from my past, kind of starting my career on the finance side and consulting and investment banking. And that kind of introduced me through a capital raising exercise to the medical device sector. And I spent a decade in 2 medical device companies, one in Washington, one in Atlanta, wearing lots of different hats and living through all the various hurdles and challenges. A decade ago, got involved in operationalizing a nonprofit spinning out of Georgia Tech with an economic development mission. So it kind of sent me down this path of working with hundreds of innovators, entrepreneurs, creating an ecosystem, and just really became fascinated with bringing together, scientists, doctors, nurses, business people, government, to move solutions forward to have an impact on patient outcomes. And that was really exciting to me. And so from the Science Center standpoint, Philadelphia had never been on my radar, which is something that I hear continuously, that, nobody knows what's going on here. And so really have the opportunity to come in and build on a platform that's been around for almost 60 years and not have to build that from scratch in an environment, as I mentioned before, where there's such a density of meds and eds and patients. To bring all these people together to drive an impact, that was really attractive to me.
Do you see a way of doing it to get it more of a national attention to the Philadelphia area? Because obviously life sciences here are huge, and you would think we would have a big reputation nationally.
Yeah, I think I don't know the answer to that question, and that's I look forward to playing a role with other partners across the Philadelphia ecosystem to figure that out. I will certainly do my part in as I travel around the country and globally to kind of tell the story of what's here from my perspective. That's maybe in a different way that hasn't been before. So I look forward to playing my role in that, but then also partnering, with leaders like Audrey and others at the chamber and at the state to, figure out how we take it to the next level.
What would be your one wish if you could have any wish for the Science Center and or Philadelphia? What do you think that would be?
To really successfully position the region as a living lab, to ideate, test and commercialize and then scale technologies that are really going to move the needle in helping improve the lives of the underinvested and underserved.
That is a great answer. I wish the same for us and for Science Center and for CBM for that matter. So thank you so much, Tiffany. It was great to have you as a guest. We appreciate all your wisdom and moving to Philadelphia. Our next guest on Money Matters TV is Dan White from Daniel White and Associates. Thank you so much for watching Money Matters TV, where your money matters. And thanks to my host, Mike Dever. See you next time.